Welcome back to Fast Market here on the TD Ameritrade Network, live from the Morningstar Investor Conference today. Let's bring in our next guest, though, and that's going to be Landon Swan. He's a co-founder of Likefolio. Looking at Chipotle here, Landon, today. The stock's had a good run at 52-week highs in today's session. And if you look at some of the results that we've seen, McDonald's a perfect example here. Expectations for this one going, into the report are pretty elevated at this point. We're seeing that little pullback in McDonald's, even though it was a solid report. What kind of data are you guys seeing out of Likefolio going into this report?
Yeah, and everything I say, you got to take with a grain of salt, because we've had McDonald's at a negative 18 going into that report. Now, that does account for, some of the stock price fluctuations and whatnot, maybe being overvalued, but we also had purchase intent down. So the read on Chipotle is going to be relative to McDonald's, I think, is the key. And when we look at how, Chipotle has done against McDonald's, it's actually, everything that we have is fast casual, fast foods kind of down across the board. But Chipotle's the least down. It's doing the best of all of those, which is why I think it does have very high expectations. It's got that really high PE ratio. So you can see here, we threw in some names for comparison. Chipotle's at the top of this list on a relative basis. And all the trends, like I talked about, are kind of going against, right? You've got people talking about being concerned with food prices at about plus 22% year over year. Talking about going to fast food or going to restaurants down 4 and 12% respectively. So a lot of the trends are working against them. And one of the things that we saw last quarter was that out of Chipotle was that they paused that price increase because they didn't have the sales pop that they were hoping. Now, they have made comments in the past about how their demand was a little bit more elastic because I think they're seen more on the luxury side of things. And they've got those higher earning customers. But I think that maybe they're starting to see that, you can't move it infinitely. People are going to react to menu price changes. And so they had to pause there. But I do think there's probably still room left. I'm just a little bit concerned with a lot of the trends going against them. And really, my main concern is the expectations being so high. I mean, you've got a PE ratio of about 56. I think McDonald's is in mid-30s right now before the small sell-off today. So 56 is a big number. You've got to be able to defend that with really explosive growth. And so any kind of slowdown, I think, is going to be a little bit of concern. So overall, kind of, neutral to bearish on the industry as a whole. But of all the companies, we like Chipotle the most. But again, they seem a little rich right here.
Yeah, Landon, here's the numbers. They've raised prices 4 times in the last 17 months, 13.5%. Year over year increase in pricing, and CEO Brian Nichols said in the Q4 earnings call, no meaningful resistance to our pricing. He thinks that his customer, slightly more affluent than the normal customer, is okay with the higher pricing. Now, you mentioned something that we can't ignore, and that is the all-time high PE on this name was about 65, and it didn't spend much time up there. It's worked its way back up to about a 56 PE. So this could be a story of no matter how good this is, the stock is sitting overbought as we speak in the RSI. It's made an incredible run, as all these fast food companies have, and frankly, a lot of stocks in the first quarter have had. So the real question here, Landon, is for our viewers and us in general and Likefolio's data, is the data good enough to hold these price levels?
Yeah, frankly, I think it's all risk at this point. I mean, you've got McDonald's coming in with good numbers, and the stock sells off a little bit, 1%. It's not a big move, but it is a small sell-off. And when you surprise like that, and they're at a PE ratio of 35. You've got Chipotle at a PE ratio of 56. So what must expectations be? Must be so much higher, and they've really got to come in and just crush it in order to, I think, hold the line. So I think it's, frankly, I think it's all risk right here. Our earnings score on it is +5. We're pretty neutral on it. We like it long term, but at these price levels, it's tough. I mean, you've got such high expectations, and as an investor, you think, well, obviously, if they do well, if their earnings go up, that PE ratio goes down. That's what you're hoping happens, and then it can be justified to buy the price back up higher to get back up to that level. That's kind of how the math of it works. But geez, I mean, 56 is a really high number for a restaurant. So I just think that the expectations are going to be so high. And given what we saw out of McDonald's and the street's reaction to really strong numbers from McDonald's, I think, frankly, it's all risk holding Chipotle through this earnings.
Yeah, expectations really elevated going into this report, Landon. But I kind of wanted to hit on the happiness concerns, but I know that you guys track that pretty heavily and you rely on it quite a bit with your data. I mean, what kind of happiness trends are you seeing? Is it still, at lofty levels at this point that maybe, people aren't pulling back and foot traffic still remains pretty robust?
Yeah, so great point. I'm glad you brought that up because, Kevin, you mentioned all the price hikes that we've seen. So, Tom, I love your point about happiness. That would be reflected in happiness if there was problems with the price hikes. And I got to tell you, that happiness chart, we didn't send it over to you today because it was so flat. Happiness has just remained very steady despite the price hikes. So consumers are showing, just like the CEO said, that they can take these price hikes. I think eventually you're going to find that point where they take a step back and say, "Oh my gosh, how much did I just spend at Chipotle?" But so far they're taking those in stride, and happiness has not moved. And in fact, it's pretty high levels of happiness. So that is one of the reasons that I do love this company long term. Happy customers are customers that refer and keep coming back. We know that with Likefolio data. The short term stuff is a little bit more about what I'm concerned with, but I will say they have very happy customers, and the price hikes have not affected them at all.
Yeah, they did polling on this, Landon, and only 7% of respondents came back and said that they thought prices were unreasonable. Normally, do you guys have a earnings score on this? You said you were pretty neutral. What was it?
Yeah, so we're at +5 right now, which, anytime we get 20 or more away from zero, that's when we're looking to take action. And keep in mind, we were -18 on McDonald's, almost to a bearish position there, not quite. So, the -1% on the stock move was in line with what we like to see, but the data itself, like the sales data, came in much stronger than we expected. So if you look at Chipotle versus McDonald's, they were a much stronger score than McDonald's was. So our expectations are higher than what McDonald's came in for, and they had good numbers. So I think it's really going to come down to Chipotle is probably going to put out some really good numbers, but all the analysts and investors are going to say, yeah, that's kind of what we were banking on, and then what do they do with it? Do they add shares or they take some off the table? For me, I think it's kind of a coin flip on how the stock reacts, and frankly, I do think the downside has a lot more room to it than the upside right now, just because the valuations are so high. On the off chance that they miss, I don't think they're going to, but on the off chance that they do, that all of a sudden that PE ratio really goes much higher because the E part of that goes down, and that's how fractions work. But then you're going to have some selling. So I think it's all risk going into it. The earnings score is +5. We're pretty neutral, mostly staying away from it. But again, I would be cautious with it holding through earnings.
Yeah, we've seen that from other reports. You can have a good report. That doesn't matter. The stock can still go down, especially when it's run up so far. All right, great